Hi, I'm Dr. S.BARATH. Today was a budget day and the markets really gave a very bullish sentiment. Of course, I had taken a few positions. Last video I was not able to post my positions. I did take some short straddles in Bank Nifty, which was reasonably in profit, and also I had taken some bullish bets actually. And you also know that I've been holding some bullish bets on some stocks with the intention of taking delivery. And considering today's market trend, all these things went really in our favor, and whatever M2M loss was there were all wiped off completely, and then we are sitting in a decent profit. So let's get into the video, and I'll explain the logic why I've taken certain trades and what is the rationale behind it. In case you have got any doubts about the trade that I'm doing, just kindly you put in your comments, and I'll be happy to clarify if it is possible. So let's get into the video. Now these are the current position that I've been holding. Now of course I did actually yesterday the Bank Nifty closed around 38,000. So I had taken a short straddle, of course a weekly short straddle 38,000, and today you see that the Bank Nifty was actually very highly volatile, and in spite of all those things I didn't actually have to do a lot of adjustments because the short straddle, the premium that I sold was almost close to around 1100 rupees. And of course I had a hedge on either side, both the put and the call side, so there was nothing to worry about it at all. And these are the budget days generally tend to be more volatile. We really don't know where it will go and how it will go, and so eventually it was a good day, and the short straddle definitely did end up in some good profit, and we didn't have to actually do a lot of adjustments. You see that I just sold some 38 call and 38 put option. It's a short straddle, and just a very minimal adjustment, and we did come out with a reasonable profit in that. And then what happened, I actually wanted to see eventually at the end of the day Bank Nifty, it did exit at around 38,500, and I wanted to initiate another short straddle, but then what happened is I felt it was not the right time because today the VIX did crash. Now yesterday the VIX was significantly higher because anyway anytime generally what happens is ahead of the budget or ahead of any big events, generally the VIX tends to be really high, and I feel that is the right time to sell short straddles if at all, because the premiums tends to be ultra high. And today since the VIX is below 20, I felt it was not the right time, so I didn't actually execute another short straddle in this account definitely. And so instead what I have done is, of course Bank Nifty is at 38,500, and I have actually executed two options. That is, of course, one was already there, that is 35,500, and another one is a freshly added position, that is 36. You can see that I am adding positions which are roughly around 2,500 to 3,000 points away from Bank Nifty. Now I will tell you the logic and the reason behind it. See, you all know that I am a very small retail trader, and this channel I have been running specifically for retail traders who have not got much of capital, just like myself. That is the case. I feel the best strength or the best safety that we have got is you have to be as far as possible from the market, which is going to get, and also we need decent premium. That's what it is. Now when we see that today, see, of course, when at the end of the market almost at around 3 or so, I did execute this 36 put option. I sold it, that is a monthly option, and we can see that, for example, yes, when we sell this 36 put option February month, which is almost say 2,500 or even say 2,700 points away from the current market price, the capital that is required is only roughly around 90, and in that the 5,000, that is 202.25, that 5,000 we get the next day. So which means it is effectively only 85,000 of the capital that we employ, and for that when we get a return of around 5,000 rupees, I think what more as a retail trader we really want, I don't know. So I didn't want to bother about selling something which is very close and going really close to strike. As a retail trader, I think the best thing what we can do is staying a little bit far. That way, see, of course I am not a full-time trader, and if we are a full-time trader, probably we will be glued onto the screen seeing each candle what is happening, what the market is doing, and that is not possible from my side. So I feel this is actually a second source of income for me, so I cannot really be glued to the screen. So why not sell something a little bit far? And we can see the chart. From the chart you can probably clearly understand what I mean. Now this is the Bank Nifty chart. If we see in a slightly larger time frame, I do see that, of course, the market was really bullish today. But I personally feel that around 38,900 or around 39 is going to be a little bit of a resistance for the market. And now just one news is enough for the market to open in a severe gap down, or probably considering the FIA selling that has been happening, just one news is enough to actually change the market the whole day. So why should we really go and sell something which is very far when we get a decent premium? And the reason why I've sold 36, 35, 500 is with a clear intention of going long in the market. So at what level am I comfortable going long? Definitely I am not comfortable going long at around 38 or 37, 500 unless and until 39 is broken on the upper side decisively. Probably I will turn a little bit more bullish if 39,000 is taken very strongly. And of course currently SGX Nifty is indicating a major gap up. But there is still one more night which is pending. We really don't know what may happen. And of late, you all know that the markets have been making very volatile and up and down moves. So no one knows what is going to happen tomorrow. So the best thing that I see is we can be a little bit far. And as and when it comes to that level, we should not be worried. We can always go long. And again, a very strict disclaimer, this is not definitely an option selling advice or so, or any stock recommendation. So kindly do your own research. I am henceforth just putting my personal views. I may be definitely wrong with the views that I am expressing. So you also can put in your valuable comments whether the strategy that I use is actually good for a retail trader, or you feel the otherwise. You feel what I am doing is right, is not right. I am happy to read your comments. Kindly put in your comments. So that's the reason I am not going far. As I told you, beyond 39 there may be some kind of resistance. In case the market is going to correct, I can always add in some positions, and I have freed my capital. I am not really heavy now. If there is going to be something, maybe a gap down or probably some kind of a correction happening, that is the time where I will add more positions. So I want to preserve my capital for adding further positions. So that is what is it. And then coming to the HDF, that is the stock option that we had. And whoever has been following my videos, you know that I had been having a 1460 put option sold in HDFC Bank. Of course, considering Bank Nifty, HDFC Bank has not done a good move. But in spite of that, whatever option we have sold, it was sitting on a major M2M. Yesterday, of course, the premiums were around roughly you can see that it crashed almost a 40% today in spite of HDFC Bank not making a significant move. So that is the power of option selling rather than being into a futures market. Just a mild move is enough for us to really get back into the game. So whatever loss were there were all wiped off, and now it is reasonably safe. And of course, I also had a 1560 call option, and today HDFC Bank did make a wild move in the morning. There was actually a very significant up move, and that time my call option was in almost around 3,000 to 4,000 rupees loss. But of course, I think, since as I told you, we are not really very close in the market, so I felt it was not something which we need to worry about, and I didn't really panic about the current situation, what was happening. So even though the call option did make a major loss in the morning, what I simply did is I executed another put option. I sold another 1480 put option. Of course, again the bank, HDFC Bank fell down, and this was under loss, but eventually during the volatility everything settled very well for us. And the reason why I sold another 1480 is, of course, I am prepared to take delivery at this level. That's the reason. I don't want to really speculate and just go with the premiums. In case if these kind of options goes in the money during expiry, I am ready to take delivery. And as I told you, these are the fundamental stocks. Another previous video that I told, HDFC Bank is in my radar. Whenever FIAs are selling, they would sell HDFC Bank. And one fine day when they are going to buy, the HDFC Bank is really going to shoot up. It is going to touch its all-time high. That's the logic behind me taking these trades. And all the options that we have sold are reasonably under no profit, no loss situation. So whatever trouble we had earlier 1 or 2 days ago has all been wiped off. So I am quite happy with that, what had happened today. And then the Hindustan Unilever, again, Hindustan Unilever did make a good up move. In fact, all the FMC stocks did make a good up move. And last video I told why I am bullish about Hindustan Unilever, Britannia, and in Britannia also did give a very good return today. And whatever stocks we have been holding is reasonably in a good profit. I also hold some ITCs, like I did sell ITC put options, and it was definitely better. I sold ITC 210 put option at around almost a 6 rupees premium. Now today it drastically crashed. So that is why we always need to take certain positions ahead of budget. We cannot be be worried about major events and not take positions. If you are ready to take delivery, if you are ready to buy the stocks in the cash market, we can always sell and some put options at which level we will be comfortable to buy, and it is better we sell before major event, of course with a proper hedge. It should never be done without a hedge. So that is what I did today, and considering the situation today, ITC really did shoot up, so I also sold some call options in that after it shooting up, and that I really sold it very far. Now of course that is not in this account, but I just want to give you my feedback, and again a strong disclaimer, it is not a stock buying and selling recommendation. So please do your own research, consult your financial advisor before taking any positions. Now the reason why I give you all these things is, as a retail trader, what is the path that we have got? The best thing is to stay a little bit far from the market, and that way, even if the market is not favorable 1 or 2 days, there's going to be some move is going to happen in our favor, and all the losses would be wiped out. Even otherwise, I'm ready to take delivery. And the Nifty is coming to Nifty. Of course, you still see that I've been holding very safe positions. It is only a 16,400 ratio spread and 16,800 ratio spread. Again, I'll tell you the logic why I have not added really very aggressively today. Now, from the chart, what I feel is Nifty is going to face or is having a major resistance by around, say, this 17,600 level. That is the level when major selling is coming in. If that is taken out decisively, in fact, as SGX Nifty is indicating, then probably I'll take a little bit more bullish bets. So as such, the premium when we sold the 16.4 and 16.8 put option, it was almost like these ratio spreads were giving us almost a 10% return for the capital that was employed. And considering these situations are very far and very safe, I feel I am quite safe here. If in case the market is going to make a significant gap down, we don't have much to worry about here, and these are the levels at which we will be taking some long positions, or we will go long in the market. And tomorrow probably if the market is going to be very bullish, I will definitely add a little bit more bullish positions, and we will adjust as it comes. So 1 or 2 days ago the M2M loss was too high, but it was manageable. Now today I am quite happy that it has all been wiped off. So these are my current positions. So in case, see, one more thing is, before any main event, binary event, that is these kind of budget days or so where the market can actually go against our favor, it is better we don't take complete positions. That is, we should not exhaust a complete capital. We always need to have some capital as hedge, and in case the market goes against us, we can always add certain other positions where we can enhance our profits, or we can always do a lot of adjustments. As a retail trader, what I would like to comment here is, it is better we stay a little bit far from the strikes. Otherwise, there is no point in dealing with options. We can always deal with futures. So it is always very tough to go with futures. In case a trader was gone long today in the futures or short, considering today's volatility, it would have been really very tough to manage the positions considering the amount of volatility that happened. So it is always better we stay a little bit far. So that is it. So as I told you, in case you feel I am missing out on something, I am not really doing a good job at the adjustments, in fact that was not at all required, or I could have really worked in a different way, you always put in your comments. I always welcome constructive criticisms, and I am very open to that. So in case you are deriving some value out of these videos, kindly consider liking the videos, adding your comments, and subscribing to this channel. Thank you all. Wish you a very good health.